Hey guys, this is Rudy coming at you live from Palm Beach in Florida. It is Sunday. It is August the 13th. I have not spoken about Carl Icahn or IEP for quite a while. And for those of you who've been following my channel, of course, you would know that I've had a huge position in IEP. And when the noise broke out related to Hindenburg's short seller report on Icahn, I exited my position entirely, lock, stock, and barrel. And I thought I will take no further part in that particular sandbox to play in. I'll just exit. I don't really like noise in my portfolio. So I exited the position. But I have been playing some catch up. So let's just take a look here because this morning I saw this report which was posted in the Financial Times. And I'm guessing that the majority of people watching this channel would not have a subscription to the Financial Times. So I thought I would just make a quick video about Icahn and share this podcast transcript with you. So this is not my content. I'm actually just sharing information with you that someone else posted. But the podcast is called Unhedged. You can actually subscribe to it via the Financial Times. And their topic was Icahn has problems. Carl Icahn is under pressure from short sellers and his own bets. The podcast features Ethan Wu, Robert Armstrong, and Hortensia Alila. I'm not sure how to say his name exactly, but that's kind of how it is. August the 10th, 2023, so it's just a few days ago. Anyway, some interesting stuff. So what I did was, this says 15 pages, but I kind of summarized it for you by just highlighting some sections in yellow, and that's what I'm going to talk about for this particular video. So let's see what these three guys from the Financial Times are chit-chatting about when they're talking about IEP and Carl Icahn. Icahn is running into some trouble recently. His investment company, Icahn Enterprises, the stock is down more than 50% this year after Icahn took an ill-advised bet against the US stock market. Now, of course, I'll just pause right there because that is their introduction. And you could say, well, the stock is down 50% because of the Hindenburg short seller report rather than the bet that he took against the market. But let's give them the benefit of doubt here and go into the story with them and sort of see how it unfolds and how they unwrap this for us in terms of explaining what their thought process is by saying that the stock, IEP, is down more than 50% after Icahn took an ill-advised bet against the US stock market. So if you'll forgive me, I'm just going to scroll as I'm doing right now and only go to the highlighted sections because that it means you don't have to read the entire report because I did. And then you can just follow along with my highlighted sections here in yellow. Carl Icahn, age 87. He's been around Wall Street for a long time. I guess we all know that. He's an activist investor, famous for taking big stakes in companies, including Trans World Airlines, more recently Netflix, and in between Herbalife. Of course, there was some really great, amusing footage related to Herbalife and Bull Ackman, but more about that in just a second. Robert Armstrong says he took, and so he buys these things. It's a transcript, right? So if it doesn't read properly, it's just some guys chatting, right? He makes a lot of noise and harasses them, the companies, to do what he wants them to do. And then when they do it and their stock price goes up, if all goes well, he sells the company. And he's been doing this since the 80s. He is, at least in part, the model for Gordon Gekko of Wall Street, which was famously a role played by Michael Douglas in the movie Wall Street. He is said to love the line, on Wall Street, if you want a friend, get a dog. On Wall Street, no one's your friend, right? If you want a friend, get a dog. Ethan says he famously got into a live on-air screaming match with Pershing Square's Bull Ackman on CNBC. That was the discussion that they had about Herbalife when Bull Ackman famously went short publicly on Herbalife. Icahn said he would take the other side of that bet. He actually made a bit of money on that one. So it's not because of Herbalife that Icahn has been losing money. Everyone just watched the fireworks. That includes me. It was fun. You bet. But, you know, you can't really say that this guy's got a lot of friends. Well, to be quite honest, I actually quite admire Carl Icahn and I like him a lot. You know, just for what it's worth, you get different types of institutional investors. You get the Warren Buffett type, who's sort of the traditional passive investor, right? He buys a large stake in a company and just sits back and allows the management to do their thing. And of course, to be fair, he wouldn't buy into the company at all if he didn't have faith in the management to begin with. So you'll see, for instance, Warren Buffett's position in Occidental Petroleum. He truly admires and trusts Vicky Holub and her management team. And as a result, he'll just stay in that position, passively, quietly, sort of working behind the scenes. Carl Icahn, on the other hand, is the more hands-on activist type investor who wants to get his own guys on the board, influence the company. If they don't agree with what he says, he'll take them into a proxy war, fight them publicly. So it's very, very different. I have admiration to both of them for different reasons at different times, but that's kind of how it works. So Robert says right now he's got this allegation that his holding company is economically unsustainable. That's IEP. Ethan says about 5 years ago, roughly, Icahn takes out this huge bet against the US stock market. He's one of those classic guys in investing who thinks the sky is about to fall. I don't think that's absolutely true. I don't think, Carl Icahn is by definition a pessimist. But you could say, he certainly would have been thinking that the sky's about to fall if he wants to take a bet against the US stock market, sort of as a collaborative. The gains that we've seen in the stock market, they are just not sustainable. That's effectively what Carl Icahn thought, or maybe said, according to Ethan Wu. Now, no, it doesn't go well. So it basically ends up losing about $9 billion over 6 years. Now, that's effectively stating the losses as a matter of fact, because while Carl Icahn has been paying this very, very juicy dividend to people like me who were long in the position, $8 per year, so $2 per unit every quarter, I was collecting that dividend, reinvesting it into more units. And as a result, my position was very, very favorably positioned overall, because effectively over many, many years, I collected that $2 dividend per quarter per unit and bought more IEP. Now, to be fair, when you're doing that on a quarterly basis, sometimes you're buying it at, $50, $60, $70. And right now you'd be buying it for like, $25. So you get a little bit of cost basis averaging if you do that. But of course, it's relatively small, right? Because you're talking about a $2 dividend, perhaps, at the time on a $50 stock or whatever, paid quarterly. So it's not like you are changing your position dynamically, but you are certainly doing a bit of dollar cost averaging as the price of the stock goes up and down. So let's get back to the article here. And Hortense is basically saying, so Icahn ends up losing about $9 billion over 6 years. I think the thesis there is that when you look at the financials over the past 6 years or so, Icahn, or IEP specifically, has not been doing very well at all, but they still continue paying the dividend. Continuing here, he says, and to his credit, when my colleague Antoine, who worked on a story with me, called him, he sort of said, yeah, I fucked up. I shouldn't have had this sort of aggressive bet against the market. I went against my own rules, the sort of things I say, and I haven't adhered to my own advice. Now, I'll just pause here for a second and say that from time to time, I also don't follow my own advice, right? So as you will know by now, if you've been following the channel and you're a member of our community, I'm very much a fundamentals kind of guy. But every now and then I get sidetracked just a little bit. A few months ago, I interviewed the CEO of GoviX Uranium, and their primary assets are in Niger and Zambia in Africa. And just over the past couple of weeks or so, Niger had a coup. And as a result, not specifically as a result of the Niger coup, but as a result of GoviX's underperformance, exacerbated by the fact that there was a coup in Niger, which is 50% of their assets, the stock, which is a penny stock trading currently at around 8 cents per share, has basically just crashed, right? So at the beginning of the year, it was about 15, 16 cents a share, and now it's down to around 8 cents per share. That's not indicative of the uranium market or the commodity or even the energy market as a whole, because energy's been on the up. And even my other long positions like Cameco, which is a uranium miner out of Canada, has been doing really, really well. And it's up about, since I bought it, it's up about 100%. I bought Cameco for less than $20 a share, and it's currently trading at around, I don't know, 35, $36. I also own some of it in Canada. Bought it around $20, is now trading at around 40, Canadian dollars. So it's not just because of that. Also covered Colonial Coal in a couple of videos. You can look at that one too. For me, that one's actually an exit strategy play, so it's a little different to GoVX. But it's not unusual for people who make a living out of investing, which is effectively where I earn my primary keep from, to sometimes go against their own advice. So for what it's worth, for the most part, for probably 90% of my portfolio, I'm in big or larger sort of mid-size to large cap equity holdings, and many of them pay a dividend. So that's kind of where I typically play. That's the sort of sandbox where I'm most comfortable. Ethan says, let's talk about Hindenburg because such an interesting part of the story. They're this short seller led by Nathan Anderson. He's the kind of, Wall Street gadfly. He likes to poke people who have gotten their head a little bit too far above the parapet. And he's using a whole lot of big words here, right? He's a gadfly. He pokes his head too far above the parapet. I don't even know what a parapet is. And who are doing these things that may not be so kosher? So all above board, right? Maybe it's not all above board. He's taken on big short positions on, Nikola, the EV company that turned out was rolling their cars downhill because they didn't even have an engine or something. And Adani, the large conglomerate in India that also took a hit because of Hindenburg. Well, the good thing is, says Robert, the short sellers like Hindenburg exist. The good thing about it is that there's tremendous incentives in the economics of Wall Street for everybody to say good things about companies and stocks and bonds or whatever. And the existence of a Hindenburg that makes its money by betting against stocks gives somebody an incentive to tell the other side of the story. And just like the cheerleaders sometimes can go overboard, sometimes they're right and sometimes they're wrong. And I'm just going to pause there for a second and give some chops to Jim Cramer, because Jim Cramer gets a lot of criticism. There's even an anti-Jim Cramer fund that you can sort of follow and invest in. Whatever Jim Cramer says buy, you do the opposite. I wouldn't do that. Jim's been around for a long time too. And in this particular instance, I'm going to give him some credit here, because I actually heard him say once, I don't watch his show, but I saw him once on a YouTube video that someone recorded saying that he does not like to invest in Icahn, even though Icahn's made a lot of people a lot of money. Jim Cramer said he does not like to invest in Icahn because it's very difficult to understand exactly what the company is invested in. And it's very difficult as a result then to study the fundamentals and study the balance sheet. And those are some of the things that I do. So Jim was absolutely correct in advising his viewers or listeners to say, like, maybe you do not want to invest in Icahn, even though he's made a lot of people a lot of money. So credit to Jim, right? What's it called? Mad money. Hortensia continues. He says, Hindenburg's main point is that the company's assets are overvalued. That's a challenging thing too, because we don't really know what the assets are, because there are all kinds of weird things in Icahn's holdings. So there's a lot of closed-end funds that are started by hedge fund managers like Carl Icahn. And so you have, for example, Daniel Lube and the other activist investor, Bill Ackman, a former nemesis of Icahn. We talked about that a minute ago about Herbalife. They trade at what we call below net asset value, whereas Icahn's fund trades significantly above net asset value. So what they're talking about there is that as a hedge fund, you own certain assets. Now, if you own, and let's just make it really, really easy, and we'll just use some companies that start with the letter A. And let's say, for instance, in your hedge fund, you own a lot of Apple and Amazon Alpha, whatever. You can actually look at those assets and value them and say, this is what the market is valuing them at or for, and this is what the hedge fund is valuing them at or for. Now, in the case of Icahn, when you look at the actual assets that he holds, just to make it really simple math, you could say he holds about $1 million worth of assets. He doesn't, it's billions, but I'm just making an example here. He has $1 million worth of assets, and the company is valued at $500 million. Comparatively, Bill Ackman or Daniel Lube has $1 million of assets, and the market is currently valuing them at 500,000. So there's a huge delta between the actual market valuation of the hedge funds run by Wall Street icons or titans like Daniel Lube or Bill Ackman compared to Icahn. Icahn is arguably grossly overvalued even today at $25, whereas Pershing of Bill Ackman is hopelessly undervalued, or maybe it's fair value. I don't know, because I'm not an investor in Pershing. Ethan says, so where does the stock trade relative to that stuff, right? Whatever makes up the sort of hedge fund, or in this particular instance, the partnership. Does it trade at a value higher than the stuff or less than the stuff? So in Icahn's case, it trades vastly higher, says Ethan. In Ackman's case, or Lube's case, Icahn's main competitors, their stock trades well below the value of the stuff that make up the actual fund or partnership. So in Icahn's case, you're paying a premium if you buy IEP. Hortensia says, so Nathan Anderson, who runs Hindenburg, says, hang on a minute, why is everybody paying so much for the stock? And the reason everyone's paying so much for the stock is because the stock has an amazing dividend. Every year, if you're a stockholder or unit holder, you get $8, which doesn't sound like a lot, but according to Hindenburg, it's the largest dividend for any large cap US company. So investors have these two incentives to invest in the Icahn enterprise vehicle, right? One of them is you're investing alongside Carl Icahn, an icon, and the other is that you're getting this great dividend. But then the problem is, how do you fund this dividend, especially when you've had a sustained period of losses? And in the case of Icahn, it's almost 6 years of losses. Ethan says, so then we get into how did Icahn fund the massive dividends that he was paying his retail investors? And here you got to get a little bit wonky, because it's strange, One of the colleagues, Bruce Elderon in the Financial Times, described it as something of a perpetual motion machine powered by share issuance. Well, that's a mouthful, right? That's why Hindenburg kind of just, instead of calling it a perpetual motion machine powered by share issuance, he just called it a Ponzi, right? So Robert says, if you don't have money to pay the dividend to the investors from the operations of your business, you need to raise it some other way. And how they do it, so Icahn, how they do it, is by issuing more shares or units in IEP, because the share price is really high. So this kind of goes in a circle, and this is where Hindenburg's allegations of a Ponzi-like structure comes in. You have a high share price because of the high dividend. You can't afford to pay the high dividend, so you issue more shares at that high share price, or at least until recently, high share price, and then you have money to fund the dividend. All of this is made possible by the fact that something like 85% of the shares are owned by Icahn and his associates, and they don't take their dividend in cash, they take it in more shares. And then what they're doing is they're paying the dividend, which they cannot afford because they don't have the liquidity. And instead of them taking the cash dividend themselves, they just issue themselves more shares, which dilutes the partnership every single time they do that. So two things are happening. They're issuing more shares. The investors from the outside who buy those shares pay in cash, and that is then used to pay them cash out in a weird little circle. And because Icahn is taking his dividend in shares, the share count is constantly expanding, which is diluting the existing unit holders or shareholders even more than by just the share issuance. This is the cycle that Hindenburg described as Ponzi-like, Ethan reminds us, which you can call unfair or fair. But there's a strange circularity too to the way that these dividends are funded, and whether you call it Ponzi-like or not, there are legitimate questions about the sustainability of the dividend, because it's kind of the plank on which it all rests, right? If the dividend doesn't stay as high as it is, who's buying the stock? And if no one's buying the stock, then the whole cycle doesn't work anymore. Now, for the people, and I doubt that there are many people who don't know what a Ponzi-like scheme is, it dates back to the gentleman whose last name was actually Ponzi. I'm not absolutely convinced or certain that he was running a system or scheme that we currently call a Ponzi scheme per se, or by definition. He just owns the naming rights because he was sort of the master of what we view today as a Ponzi scheme. And it simply means that the early investors make a lot of money. The late investors are late to the party. And typically, new money coming in funds the first investors. And then you get to a point where there are no new investors coming in or no new money coming in, and the whole thing falls apart and just collapses. Now, that's kind of the allegation here that Hindenburg had made against Icahn. And then just last week, so remember this was recorded on August the 10th, so this is relatively new. So just over a week ago, Icahn Enterprises cut its dividend in half, which was huge news. $8 down to $4. Now, do you still want to be in the position at all when it's only paying $4 per year instead of $8 per year? Well, it's a 50% dividend cut, but you know what? It's still big. It's still a very good dividend, $4 per year. So to be clear, companies do this all the time, right? Your share price goes up, you just issue new stock, right? It's not malfeasance. It's not a bad thing to do what he's doing. The problem is that the underlying assets of the company are not performing great, in addition to the fact that they are grossly overvalued. So there's a little bit of a disconnect here between the reason that everyone's buying into Icahn. Like, for instance, for me personally, I bought into Icahn because of the high dividend and because of Carl Icahn, right? So it gives you like a sense of confidence, even if it's false bravado. It allows you to say, like, this is a business I probably want to be invested in. You know, it's like buying Berkshire Hathaway. You're investing alongside Warren Buffett. And I think that is what Hindenburg is sort of relating to. It's saying, well, actually, all of the assets, or not all of the assets, but, you know, a lot of the assets are in this company. Are they actually performing well? And also, there is just a ton of assets that are melded together, right? Like my comment about Jim Cramer, who says, I don't know what's in the company. The financial statements of this company are really, really difficult to read. Generally, despite the fact that they look difficult to read, they're actually quite easy to read. There are assets that the company owns and business that Icahn owns just like outright. There are some real estate holdings. That one's always tough, right? How do you value real estate? Because real estate can only be valued based on what a willing buyer is willing to pay a willing seller. Assuming they come to an agreement, that's the actual value of the real estate. So that's a tough one, right? So in fact, I'll just pause you for a second. That's one of those examples of people who, you know, in the media will say, you know, Trump claims he's worth, Donald Trump claims he's worth 12 billion, but he's actually only worth 3.1 billion or whatever the case might be. I don't know what the numbers are. I don't care. I'm just giving you an example here. But if you take a property, including the property where Donald Trump currently lives, which is called Mar-a-Lago in Palm Beach, which is where I'm broadcasting from. So if you say, how much is Mar-a-Lago worth? Well, it's an enormous estate. I mean, it's like a small castle that he lives in, right? But Mar-a-Lago is also a club, and people can buy membership at the club for a few $100,000 per year. And he has thousands of club members. So it's also a business. So if you were to sell it, how much is it worth? So if you say, I'm going to look at the tax records and decide how much Mar-a-Lago is worth, which is what a newspaper reporter might do, they'll say, well, the tax assessment on the club is, you know, I don't know, 200 million. I haven't looked it up. I'm just using an example here. So you can say, well, if the tax assessed value is 200 million, maybe it's worth 1 billion or so. But really, if you wanted to sell it, he might be able to sell it to a, you know, a prince or a Saudi energy company owner or something for, I don't know, 3 billion. I don't know what it's worth. It's very difficult to value real estate holdings. Then there's a meat packaging company. Yippee-ki-yay. There's a recently bankrupt auto parts company. Oops. And then there's a country club, which is a question. I'm not sure about that one. Yeah, there's a country club that's now been taken over by the members. Well, that's not a good sign. And then there's some sort of a pending lawsuit there. So that's just a lot of weird stuff, I guess is what he wanted to say. And then there's Carl Icahn's adventures on Wall Street. His long or short bets against various companies. Reading the financial statements, it's not always easy to parse out over time which bit of money is coming from where. But it is clear from the financial statements over the past 5 years that there is more money going out of the business as dividends than there is coming into it from operations and the Wall Street bets. And that is never a good position to be in. Even from a personal point of view, if your salary is $1,000 per year and your, per month, and your monthly expenses for your mortgage and your car and your food and stuff is $1,500 per month, you $500 short, then you probably should not be giving money to charity or handing out dividends in the case of Carl Icahn. You have to have a balanced budget if you're a household, because you are not the government and you cannot print money. If you do, you go to jail. If the government prints money, they get a pat on the back for running a very, very fine economy. What does Carl have to say about all this? Well, he hasn't really addressed the claims. In fact, that's one of the biggest problems I have with Carl Icahn right now. He hasn't defended the position at all. All he said was that Hindenburg's report is a self-serving report, which is really, as they say here, kind of like a no-brainer. Of course it's self-serving. Hindenburg discloses at the end that they're shorting the company, but Icahn himself issues self-serving reports all the time, right? When he criticizes a company, it's self-serving. When he praises a company, it's self-serving. He said, if you bought into our units in 2000, I think it was 2000, he said, until today, you beat the S&P. Well, that's pretty good, especially if you reinvested the dividends, which is what I was doing before I exited the position. If I was Icahn or his PR man and I had to defend him, I would make a case like this. And they have sort of said these things broadly like this in talking to investors. It's a very lumpy business. Icahn takes huge bets. Sometimes they pay off huge, and sometimes it's very lumpy over time. So you might argue on behalf of Icahn, we're just going through a bit of a dry patch here. And one of these bets we have going on one of these companies is going to come in. Big money is going to roll into the balance sheet and everything's going to balance again. And also the dividend adds a little bit of consistency, right? Well, if you were just investing in a hedge fund, you would see those returns go up and down, whereas investors are getting this dividend. At the same time, a 15% yield annually. And so they get a consistent return despite whatever is happening underneath, whether it's good or not. Why does it make sense for a corporate raider to have a holding company in the first place with publicly traded shares? It is because he needs a currency to borrow against to make those big bets on certain companies. That is why he needs the stock price to be high, because that is a financing mechanism for his Wall Street adventures. But one thing that financing mechanism has financed is this terrible bet against the stock market that cost him $9 billion. So what happens next? Icahn is in a bit of a hole. Share price is down, the dividend's being cut, he's nursing these losses for the past couple of years. I mean, do we think he's going to be able to dig himself out of this position? Hortensia says, I think that's the question everyone is asking. I'm not saying he is, but the question everybody is asking is, Icahn broke? He says, actually, I've got a few billion elsewhere. You just can't see it. He needs a win. He needs a win. Icahn desperately needs a win. But Icahn also has a couple of challenges because the assets underlying IEP enterprises are not valued at fair value or below fair value, which means the company, even at $25 per share, is probably not a buy. Icahn says he has a few $1 billion elsewhere, but he also has margin calls, I think, from Morgan Stanley the last time I looked. And some of those margin calls are secured. In other words, the collateral for the debt is IEP. And IEP, a couple of months ago, was trading at 50, 60 bucks. And now IEP is trading at 25 bucks. So what happens to those margin calls? Do they get called? Right? So there's a lot of stuff going on. But anyway, this from me is just a news update. So effectively, I'm just sharing the news with you because it was a good read for me this morning, Sunday morning. While I was relaxing and having an espresso, I was reading this report and I thought, you know what, it's good stuff. As I said at the beginning, I'm sure not too many people have a subscription to the Financial Times, so I'll just share the information with you. Hope you enjoyed it. Hope it's worthwhile, especially to the people who are long IEP, if you still are. Anyway, let me know what you think in the comments. Take care. Bye-bye.